let's go. Okay, this is the local government committee in room 444. A few housekeeping things. To say the speaker has appointed Assemblymember Mullen to replace Mr. Alejo today, and Mr. Jones, welcome, to replace Assemblymember Gaines today. We have 13 items on our regular agenda, 4 proposed for consent. The consent calendar includes item 11, ACR 169, item 12, 13, and 14, SB 971, SB 972, and SB 973, which are the Senate Governance and Finances Committee's annual validating acts. We have a special order of business at 1:30, AB 2693 for Mr. DeBobney, and we will commence with our regular order of business after that bill is done. Secretary, please call the roll.
Eggman.
Here.
Eggman here. Eggman.
Here.
Here. Waldron. Waldron here. Mullen. Bonilla. Bonilla here. Chu. Cooley.
Here.
Cooley here. Jones.
Here.
Jones here. Gordon. Linder.
Here.
Linder here.
Here, here.
Chu here.
Chu here.
Okay, so Mr. DeBobney. And then, as you're sitting down, I'd just like to make some opening comments on this. I think we've all spent an inordinate amount of time on this bill, and so I want to thank you for bringing it forward and shedding light, I think, on this extremely important and complex issue. And I certainly applaud all the disclosure requirements that we think will best protect homeowners and allow them to be informed when they're doing things like this. I'd also like to say I think the proponents who have skillfully identified the problem this bill is trying to address, homeowners who have entered into PACE programs and are unable to sell their home or refinance without paying off the entirety of the PACE assessment, is a problem. But at this point, I don't know that what you've crafted as the solution is the actual solution. We didn't have language on this until Thursday. A lot of people didn't have a chance to get their opposition in.
I respectfully disagree with that. The language was in since last week.
In print since Thursday. Correct.
I believe it.
Voted on in banking.
We voted on this bill in banking last week, and the language was available in my banking hearing a week ago, so I'm not sure if that's correct.
Okay. Well, we could have a difference of opinion on that.
Yeah.
So in order to just kind of step back, I would hate for us to hurry and rush and to put in language, I think, on what we've all agreed is an incredibly complex issue on a program that is still relatively new, and I think we're all finding out a lot more about it as we go forward. I am committed to doing a hearing on this where we can all really come together to flesh out these issues in a holistic manner instead of trying to just solve certain components of the problem associated with PACE that might benefit one interest over another interest. I would welcome, as part of banking and finance, for you to join that. Then we would schedule that for June. We all know that PACE was put into statute in 2008, and the intent was to allow local governments to utilize this creative financing tool for homeowners to be able to engage in this. But putting into statute this subordination language is going to effectively end those local government programs in order to be able to offer that, which I think was the way that it was first intended, but it has certainly kind of morphed into something much bigger. I'm bearing that in mind, and we're thinking about really consumer protection. Without accepting the amendments, I won't be able to support the current version of this bill today. I think the disclosure component is incredibly important, and I think that's what I am willing to support, and a do pass as amended if we're going forward. And so all that to be said, and to remind everybody that we're focusing on hopefully homeowner protection and really looking holistically at this, and that I think we need more time in order to be able to do that. So again, without the acceptance of amendments, I won't be able to support this today. But I think it's important that we all listen to this, and please, you may begin.
Colleagues, I appreciate you letting me present first today. I do not quite understand why we called a special order of business for this, but I will respectfully go along with the chair's wishes on that. AB 2693 addresses two very important consumer protection issues within: enhancing disclosures to consumers prior to entering a PACE lien, and allowing consumers the ability to sell or refinance their mortgage by allowing lien subordination. Today, I will reluctantly accept the proposed committee amendments as reflected on page 9 in the committee analysis. I do not agree with Amendment 10A, as I believe the legislature is missing an opportunity for the state to get ahead of this issue. Although the bill will be stripped of the lien subordination, I will continue to work on this issue as it is an important financial consumer protection issue that needs to be addressed before more residents and homeowners of our state are put in a compromised position that could hinder their ability to sell or refinance their biggest investment, their home. AB 2693 is a bill that positively impacts the Property Assessed Clean Energy Program, otherwise known as PACE. By implementing much-needed consumer protections and minor technical changes, it is worth noting that in its current form, AB 2693 rightfully passed out of the Assembly and Banking Finance Committee with an 11-to-1 vote. Some of those members are on this committee today. I fully support the PACE program and its goals of reducing our state's carbon footprint. It's undeniable that the PACE program has allowed thousands of Californians to purchase energy efficiency upgrades that they would not have otherwise been able to afford. However, the only way to ensure that this program continues to succeed and is sustainable is through the recommendations within this bill. AB 2693 establishes a uniform disclosure that must be provided to each homeowner prior to participating in the PACE program. The disclosure will ask providers to notify consumers of the product costs, financing costs, annual percentage rates, as well as other costs. I have heard countless stories, and you'll hear today from consumers who took out a PACE loan and were unaware that it adds a lien to their property, or unaware that they would not be able to sell or refinance their house without first paying off the entirety of the PACE loan, often with penalties or higher costs attached. I am also committed to ending the practice of forcing consumers to be charged a prepayment penalty or being charged a higher interest rate up front to be able to pay off their loan. Could you imagine if car dealerships did that? I don't think so. Recently, Channel 2 featured a story in my LA market that highlights the plight of consumers who have been misled and taken advantage of within the PACE program due to a lack of any meaningful disclosures or consumer protections. This piece also highlights the negative consequences of a super lien can have on unsuspecting homeowners, especially seniors. I have sent this video to all of my colleagues to watch, and I hope that they gave me the respect in doing so. I also asked the committee today to view this within our testimony. However, that was rejected by the chair, and I am greatly disappointed that the chairwoman chose to limit debate on this matter and not allow the video to be shown. But I am grateful that the victims of this story are here to testify in support today. When the PACE program was created, the legislature envisioned local governments taking control and running the program. Instead, all but one county has contracted out all their tasks of the PACE program to third parties. These new entities administer and finance a program. Because of the initial legislation did not foresee this new private entity structure, these new entities are currently unregulated, which has led to a number of disturbing consequences for consumers at the point of sale. Additionally, the legislature did not foresee the drastic impact this new financing alternative would have on the housing market. Initially, the announcement of FHFA, which is the Federal Housing Finance Authority, in 2010 halted the PACE program. But in the last 2 years, the PACE program has picked up momentum, essentially ignoring the future impact that FHFA's prohibitions will have on California's real estate market. AB 2693 responds to several announcements released by the FHFA, starting in 2010, prohibiting Freddie Mac and Fannie Mae from purchasing any mortgages with a PACE loan because of the lien situation. Freddie Mac and Fannie Mae guarantee upwards of 90% of the mortgages in the United States. AB 2693 will ensure that the next generation of PACE loans no longer creates unexpected costly burdens on borrowers, and I look forward to continuing this effort. California was at the epicenter of the foreclosure crisis. What will happen when the next real estate crisis hits? When seniors need to sell their homes or get a reverse mortgage? When people need to refinance and they can't because they have a PACE lien? Currently, homeowners are at the whim of these third-party unregulated entities who hold the ability to approve or deny a lien subordination and therefore directly control the ability of a homeowner to sell or refinance their home. While I believe the legislature needs to respond to the actions by FHFA and FHA, I'm not willing to sacrifice the disclosure part of this measure and request additional information be included in the disclosure, as consumers need this information to make an educated decision before they make such an investment on their home. This will include no prepayment penalties, a statement to borrowers that they have the right to ask for a lien subordination. They should at least be able to ask for one. A checkoff box that a borrower must check stating that they understand a PACE lien could impact their ability to sell or refinance their homes. and more underwriting standards. California is and will remain a leader in PACE programs and in environmental stewardship. I'm a great believer that we all need to do more to make our homes more efficient when it comes to water and energy. But as a leader, our responsibility also has to make sure that this program is preserved in a way that protects consumers and responds to unforeseen hurdles. We must lead by example. As California goes, the rest of the country usually follows. And on this issue, we have a chance to be a leader. I will take the amendments, like I said today, but look forward to taking the chairwoman up on her offer to work on this bill going forward. I respectfully ask for your aye vote today, and I will ask that we have witnesses in support today, and we'll also be hearing from Courtney Jensen from the California Credit Union League and Stan Wigg from the California Association of Realtors. But before we do, I'd like to have the victims who were featured in the CBS 2 Los Angeles story by David Goldstein. I'd like to have them first give their testimony. Thank you.
And just responded, you just asked a question about why we did a special order of business. I just thought this issue was so important that we should schedule a time certain so everybody who was interested and so the public would certainly know when we were going to be hearing it.
I appreciate that. Thank you.
Okay. And I'm glad you sent the video to all the other members. I didn't receive it, and we didn't get the request until shortly before the hearing. You didn't get that either? Okay. Okay. So thank you. So first witness, please.
Good afternoon, Madam Chair and committee members. My name is Dan Mason.
And my name is Carrie Mason.
We're homeowners in Bellflower, California.
And thank you for the opportunity to share our personal PACE story. In February of 2016, we had solar panels placed on our home with a Y-Green PACE loan.
We told the contractor from the very start that we could not afford solar panels at this time. They said not to worry, that the project would be covered by a government program, and there would also be rebates involved. We verbally agreed with the contractor to pay Y-Green $130 a month for the next 10 years.
The contract that they gave us was backdated. We actually signed the documents in mid-January, but it shows that we signed them on December 10th, 2015. We didn't even get the City of Bellflower approval for the solar panels until January 9th, 2016. We can't even monitor our solar panels because of a missing wireless adapter. So we don't even know if our solar panels are even working. We received the closing statement from Y-Green in March, and that's when we found out about the lien on our property and that we had a $5,000 a year special tax. We didn't even know about it until March, and this all started happening in December.
The contractor told us by using this product, our utilities would be cut in half. And basically the installation and all would be covered with a government program and a rebate. We later found out this is not a government program at all, and it was actually a private company, and the loan would have to be paid back through an assessment on our property taxes. This loan has increased our property taxes and also made it impossible for us to refinance or sell our property.
This program has completely derailed our retirement dreams and goals after being told it would be an added value to selling our home. We support AB 2693 and its efforts to address the huge issues we are currently facing.
Homeowners like us should be protected when taking out these kind of loans by receiving necessary consumer disclosure and making sure these liens can be transferred from the property if they're to be sold. Thank you very much.
Thank you.
Thank you. And I'm sorry you've had this experience. Next witness, please.
Good afternoon, Madam Chair and committee members. Thank you for your opportunity to share my personal PACE story. My name is Bart Chambers. I'm a resident of Placer County. I'm a United States Navy veteran and a public safety professional. I obtained a PACE assessment from Empower to increase the marketability of my home, which I intended to sell in the next 18 months. I was told that adding the $15,000 solar system would make my home more attractive to buyers and would increase my property value anywhere from $25,000 to $30,000. In fact, I was given two options to pay for the improvement: cash or PACE. PACE was the preferred option by the contractor. I was told that I could deduct the loan and interest from my taxes. Last August, I entered into a 20-year PACE contract after participating in Empower's education course. The same contractor who told me about PACE loan also installed my solar panels. I was told that the balance of the assessment could be assumed by the next purchaser and early payoff would result in a prepayment penalty. I thought I knew all the pros and cons of PACE. I was wrong. At no point was I informed that I would not be able to sell or refinance my home due to PACE's super priority lien. I may have overlooked some obscure written statement, but that was why I intended the Empower course. Entering into PACE loan, I knew the interest was about 6%. The reality was different, as it was more like 7% when you took into account the APR. This difference was uncovered on my tax bill after it was too late to change the loan terms or find an alternative finance tool. Even more shocking, I went to refinance my home, and I was informed that I could not refinance unless the Empower loan was paid off. The mortgage company advised me that no financial institution would give me a loan with the PACE loan in place. I discovered that the value of my home is less with the solar panels and not the promised value as told to me by the contractor in the county. Adding further insult to injury, the VA may put me on notice that I'm in violation of my mortgage contract with PACE loan in place. A fact the county and contractor knew but failed to share with me. As a result, I cannot refinance or sell my home until the PACE lien is paid off. Excuse me. How is this fair? As a consumer, I sought to do the right thing by making my home more energy efficient, and now my family is being unfairly punished. I am now forced to search for solutions to a problem that should have been appropriately disclosed to me prior to entering into a PACE loan. Under AB 2693, consumers will receive necessary disclosures and be protected from violating their mortgage contract. Please help to protect the consumers and other veterans from the unfair lending practices that I was subject to, and allow this program to operate as advertised by counties and PACE providers. I respectfully ask for your aye vote on AB 2693.
I'm sorry for your experience, and thank you for your service.
Thank you, ma'am.
Madam Chair and members, Courtney Jensen with the California Credit Union League, representing California's credit unions and their 10 million members. We are one of the co-sponsors of AB 2693. We are thankful for the support on the disclosure today, and that the bill will hopefully be moving forward with that included in the bill. But we continue to believe that fixing the lien status is immensely important and is an immensely important consumer protection. I think it's important to note that the priority fix that was proposed in this bill is a reaction to the FHFA multiple statements that the lien priority on PACE loans needs to be subordinated to first mortgages. And so I just want to make that clear that this is a FHFA federal government suggestion that we were hoping to move forward with. We will continue to work with the author and chair to hopefully address this issue moving forward. We really hope that California homeowners will be protected when they're getting into these PACE liens. We are really worried about the next market downturn. The state's credit unions had worked really hard during the last mortgage crisis to help homeowners do loan modifications, and we're worried that these super liens attached to these properties will limit our ability to help them. We were hoping that even though the bill was not retroactive with the PACE lien, that we were hoping to get ahead of the issues that are going to come forward. So we look forward to working on this bill further and hopefully to address this problem very soon.
Thank you very much. Next person,
Madam Chair,
and then after that, we'll just have people, names and support or opposition, but you're welcome to go ahead.
Madam Chair and members, I'm Stan Wigg with the California Association of Realtors. We strongly support the bill in its amended form. We think that these are disclosures that would apply to any kind of home improvement loan. They ought to apply to the PACE loans. Some of the stories that you heard today probably wouldn't have happened if we'd had a better disclosure portion. We are committed to working collaboratively with the PACE providers in order to reach a solution on the FHFA regulatory quagmire that we're in, and we're committed to working on the details of the disclosure, as Mr. Dababneh had mentioned. We request your aye vote. Thank you.
Thank you very much. And now others in support. And Mr. Dababneh, just to clarify, some of the members have been asking, you accepted the committee amendments listed in the analysis on page 9, comments 10A, B, and C?
I do.
Thank you, sir. Others speaking in support today.
Madam Chair, Pat Zenzela here on behalf of the California Mortgage Bankers Association. We thank the author and the committee for working on this very important public policy issue, and we support the bill. We do think, even though the lien language is being removed from it to move it forward, we think it's a critical issue that should be addressed to protect consumers' homes.
Thank you.
Madam Chair and members of the committee, Kevin Gould with the California Bankers Association. We're a co-sponsor on the measure as well. We thank the Assembly member for bringing forward this important emerging issue. We also think that the lien issue, the priority, must be addressed in order to effectively deal with this on a go-forward basis, both for the consumer and also for the liquidity issue that this has caused in the marketplace. We respectfully ask for your aye vote. Thanks.
You. Again, name and agency, please.
Madam Chair and members, Lexi Howard on behalf of the California Escrow Association, California Mortgage Association, and United Trustees Association in support and respectfully request your aye vote.
Thank you.
Margaret Gladstein on behalf of the California Community Banking Network in support.
Thank you.
Madam Chair, committee members, Craig Page of the California Land Title Association in support.
Thank you. Anyone else speaking in support today? Okay. People speaking in opposition, please.
Good afternoon, Madam Chair and members of the committee. My name is Kara Martinson, and I'm here on behalf of the California State Association of Counties. And we did have an oppose unless amended position on the bill, but in light of the author's acceptance of the amendments, we're definitely willing to revisit that position and would like to continue to work with the author on the disclosure and transparency provisions of the bill. I really do think that we ultimately share the same objective with that measure, and that is to provide greater education to property owners to what these financing tools are, their tremendous benefits, and also some of their current challenges. We also commit the priority lien status is obviously very important to us and very much support that moving forward, but we are working and have been since 2010 with the administration on advocating the federal government to develop some type of permanent solution so that we are able to move forward and really provide this innovative financing tool to homeowners and achieve our ultimate goal statewide of reducing greenhouse gas emissions, but also provide an opportunity for homeowners to install these improvements on their property. Thank you.
Thank you. Next person speaking in opposition.
Hi, my name is Ben Benoit. I'm a member of the Wildomar City Council. I'm also a member of WRCOG. I'm actually the vice chair for the COG. WRCOG is the Western Regional Council of Governments, and although we were in opposition earlier as well, we are now willing to support the bill as amended and appreciate the author's amendments in that regard. And just quickly, I'll go through how we've been involved with PACE. WRCOG is an administrator of two residential PACE programs, the WRCOG Hero and California Hero, which together are the largest, most successful residential property assessed clean energy programs in the country. We are proud of the benefits that the PACE program has produced for our communities and our homeowners to date. We have extended over $940 million of financing to approve over 40,000 homes across the state. We are also committed to disclosure rules, and in furthering those disclosure rules, we have worked really hard with our partner, Renovate America, to further our disclosures from even what we started with 2-3 years ago. We have gone a lot further than where we were before. We are enhanced by these the further commitments, and we look forward to working with the author on the bill.
Thank you. Next person speaking in opposition.
Thank you, Madam Chairwoman, Madam Vice Chairwoman, members of the committee. My name is Ari Matuziak. I'm Executive Vice President for Market Development and External Affairs at Renovate America, and I appreciate the opportunity to be here today. We want to thank the chair for bringing his bill forward, AB 2693. We were originally opposed to the bill as originally constructed in its mechanics, but not in its spirit. And we appreciate the amendments and are supportive of a clean disclosure bill. I also want to thank the individuals who came to share their stories today. I think it's important, very important, to hear from folks in the marketplace as we work to improve this product and this offering to homeowners. I thought I might just take a minute to create a little bit of context around PACE and what it offers and how we administer it in the state of California. As I believe the committee knows, PACE was designed to solve a market failure. 1 in 6 homeowners each and every year change a product in their home that impacts energy consumption or water consumption, but 75% of those people each and every year choose the least efficient model. And that is a result of a market failure that's been around for a long time, and it represents homeowners spending $40 billion each and every year on energy and water costs. PACE is a response to that. And at a high level, the impacts have been quite positive. For Renovate America, and with working in partnership with the Western Riverside Council of Governments and our HERO program, we have funded $1.45 billion in projects to date. 61,000 households have participated. And the improvements will result in a projection of savings of 9.3 billion kilowatt hours of energy, a reduction of $2.5 billion and 2.5 billion tons of carbon dioxide emissions, and then there are economic development impacts as well. The creation of about 12,000 jobs in the state of California, and over $2.5 billion in economic impact. The statements that were made today regarding the program at a market level are very important to consider as we work to continue to improve the program, and that's why we're very supportive of increased disclosures. Regarding the transferability of homes with PACE assessments, Fannie Mae and Freddie Mac account for about 46% of the national mortgage originations. And over the past 4 years, we've worked with our government partners to finance improvements over 60,000 properties, as I've mentioned. About 11,500 of those properties have since either been sold or refinanced. Homeowners have paid off PACE assessments in 26% of those transactions, and we're able to transfer the assessment in 74%. So about 3 out of 4 are able to transfer through sale and refi combined. Unfortunately, there have been instances when homeowners, particularly those who signed up in PACE in the early days, have unexpectedly been required to pay off, and you heard some stories today. In response, we've worked with the Western Riverside Council of Governments to strengthen our disclosures, and we believe that they form the basis of the amendments that have been offered today. Specifically, our disclosure says the following. I understand if I refinance my home, my mortgage company may require me to pay off the remaining balance. If I sell my home, the buyer of their mortgage company may require me to pay off the remaining balance. In order to ease friction at sale or refi for existing customers whose lenders have indicated that they will not extend financing because of the PACE lien, Renovate America, working with Western Riverside Council of Governments through our HERO program, has pioneered a contractual subordination process whereby we subordinate our right to foreclose on the encumbered property as well as our right to proceeds from a foreclosure to the first deed of trust. Since launching this option last spring, we've approved 100% of subordination applications that have come our way and completed 400 subordination contracts at no fee to the property owner. The contractual subordination model has proven successful, and we're learning as we go. The existence of a yet untapped $10 million loan loss reserve fund to compensate first mortgage lenders is also a feature in the state of California. And we are committed to working with the legislature, to working with the administration, and working with partners in the marketplace to further improve PACE and to make it a long-standing product in the state of California, and one that we can all be proud of. We are incredibly proud of our partnership with local government in bringing energy efficiency and renewable energy improvements to homeowners in California. And as part of our mission, we take very seriously our responsibility to local governments as well as to homeowners. We share the concern the bill author has had to ensure adequate disclosures and consumer protections, and we appreciate the progress that is being made and the opportunity for a clean disclosure bill. Thank you.
Thank you. Anybody else speaking in support or opposition?
Madam Chair, members, Jason Ryan, League California Cities. We are in a similar position as our county counterparts in that we had an opposed unless amended position. With the amendments, we're hopeful we'll be able to get to a support position. Really appreciate the author, the chair, for working together on this important issue. We'd really like to participate in the upcoming informational hearing as well. We do share the concern over disclosure. We think we can enhance that. There's still more I think we can even do within the bill. So with that, we certainly support the bill. Thank you.
Thank you.